Good morning, Quasar Markets Live. Howard Greenberg here, your host of Quasar Markets Live. Good morning and a happy Thursday to everybody. A little bit of a mixed bag so far. We have SPY, looks like it's right now up about a quarter of a point, so we are seeing a little bit of a bounce back after NVIDIA's earnings after hours last night. So let's get into some of these charts right away. To be honest with you, let's take a look at what's going on in the markets and we'll start to talk from there. Here we go. So as I said, SPY right now. Whoops, got the wrong one on here. SPY right now at about 558, 559.85, up about a quarter of a point, about 0.28. We can see here, overnight after bouncing down on NVIDIA's earnings last night. This morning we've seen a nice little bounce back, so we are seeing a little bit of momentum. Question is, can we carry this on? We haven't seen much follow through. First level I'll really be watching here will be right around that 562.27. Which was a spot where we tied out yesterday morning. So I'm sort of looking to see if we can regain that level. You can see it's been a resistance spot a few different times here on the SPY. So we'll see if we can get up there. To the downside, it looks about 558.81, about the area you kind of want to be concerned with. So we'll see what we do here in this trading range right now. I do think we are probably somewhere in this range to start off our day as the markets open. So take a look at NASDAQ here, see what else we see. NASDAQ I already have sort of the spot I'm watching to the low side for 68.57. So not as low as it hit yesterday. I'm not looking for it to drop all the way back down there. I'll get nervous here as we sort of start to tighten that line up a little bit. Right around that 458.25 mark. To the upside, same thing. I'd like to see, can it get above 477.84? Could lead to a nice green day for us. And you can see that's where it had some problems on Tuesday and Wednesday. So those are the trading ranges I'm looking at so far on the SPY and QQQ. Like I said, let's take a look at NVIDIA. That dominated the news most of the week. It did drop below that support level we saw and talked about yesterday afternoon. What we do see is that support level now turned into a little bit of resistance here in the pre-market hours. So yesterday we were looking at that as support, and we were looking at it because, we had seen that sort of hold up around here, in this area, and even over here. So we had 3 or 4 different examples of that 123.32 being some decent support. Now our worry, does it flip to resistance? So that's what we'll be watching here this morning. On support side, really that 117.25 area looks to be about your key support. We can see here yesterday, this area right around here, and that 120 gave it a pretty good spot to come back from. But, NVIDIA, talking about their earnings. Notes that I took on NVIDIA's there is sales through July were about 30 billion. They beat estimates that were in the 28 billion range there. Profits have more than doubled year over year at about 16.6 billion. So that was really positive. But where we started to see a little bit of concern had to do with the gross profit margin. That's narrowing a little bit, So now people are wondering, how much is AI going to cost? That seems to be a concern that they did talk about was the amount of investment needed. There was also a little bit of concern in regards to the Blackwell chips. There was a design flaw that caused them to make a tweak there, and that it had started to lead to some of those narrowed options, or narrowed margins. So that's what's sort of weighing on it. I personally thought it was a pretty good, earnings call, and I did pick some up here overnight. In this morning, so I'm a fan of it in this 120 to 121 range, as a good spot here. So I did like that. On the other side of the markets, let's take a look at CRM Salesforce. Steve had spoken a little bit about that last night. They had a fairly positive, earnings report overall, and the market has reacted pretty well to it. So, we're seeing that it isn't all the doom and gloom. We're definitely seeing a mixed bag here today and, overnight and into the early morning trading hours, pre-market hours. We're seeing a mixed bag. So, as you can see, Salesforce is up about 4.36% here after announcing earnings. It shot up immediately to about that 271 level. Now down around the 270 level. It did get as high as 274.68 overnight. So Salesforce, nice extended rally there. They reported a pretty robust fiscal second year results. They beat estimates and they did raise their full year outlook. So, that's not too surprising. On the other side of that is a company also did say that Amy Weaver, who is its chief financial officer, will step down. She is going to remain at the company until they announce or hire a replacement. But that did it on some of the key numbers that I wrote down on that one. Earnings per share, they were around 256 adjusted versus 236, which was there. So a nice little beat on that. Same thing, revenue was about 9.33 billion versus a 9.23 billion expected. So good to see both of those numbers come in well. As Steve talked about, Salesforce provides that infrastructure, that software as a service, to a lot of companies, providing their back end. So they are a good read on just tech in general, not so much the chip area, which we know NVIDIA, chips definitely beaten down yesterday. Across the board, we did see that. Sympathy plays, AMD was down. SMCI, another issue. We'll look at that again here in a little bit. But a few of them had been. In fact, we'll pull a couple of them up. So AMD, another chip producer, can see down about 0.5% after yesterday losing 2.75. INTC, Intel, obviously another big chip producer. Again, oops, I didn't do that right somehow. Oh, because I added it. And again, they're up a little bit this morning in the pre-market. It's good to see after losing 2.29 yesterday. So we are seeing a little bit of a mixed bag. Another one that had taken a big drop I saw on the retail side, as you guys know, I was more focused on retail yesterday, was Dollar General. DG there with a big 25% drop in the pre-market hours. They had a bad outlook. They talked about their consumers being financially constrained. So they do see, a little bit of an issue. We see some weakening in the economy down in the low levels. They slashed their sales and profit guidance for the full year. And they said that, like I said, their lower income customers are struggling a little bit in this economy. Company now expects 2024 same sales to be up about 1%, lower than the outlook that they had from between 2 to 2.7. And again, they're looking at earnings per share in the range of about 550 to 620 versus the 680 to 755 lane. Their CEO said, while we believe in softer sales trends are partially attributable to a core consumer who feels financially constrained, we know the importance of controlling what we can control. So putting the onus back on some of their managers to manage a little bit better, tighten those budgets there. But Dollar General definitely seeing a downgrade there. On the other side of that is Best Buy. And we see they're up about 13.91 in the pre-market trading here. They, on the other hand, had a nice quarterly report, and they expect their profitability to end up higher. They increased their profit expectations for the fiscal year following their strong quarter. They predict adjusted earnings for the fiscal year ending in January around 610 to 635 a share, which is nice from that 575 to 620 range. So you are seeing Best Buy move up on this guidance. They had about a revenue of about 9.29 billion, which was down a little bit from last year over year, but they were still seeing some stronger growth in other areas. And again, so we are seeing both sides play out here, where you're getting coverage on both sides. You're getting the data dependent trading. I like to see that, where it is actually based on what's going on and not just on sort of the zero DT movement of it. Some other ones I wanted to talk about here this morning. CrowdStrike. Talked a little bit about them yesterday. They were down to a little over 2%. They actually, their earnings report, I think it put to rest for some people. They talked about, their earnings, they were a beat, but their outlook was a little down based upon, the big problem that they had, a couple months ago with that crash. They did, again, they reported that their earnings beat expectations and that they have strengthened the subscription business was still strong, but they did trim the full year outlook. Their net income in the quarter was 47 million, and that really was a nice move up from 8.5 million last year. So you really saw a big increase there with CrowdStrike. So the numbers were really good. I think, like we talked about yesterday, a big part there was, what's it going to cost them to keep those customers, and not have a big thing. And they did talk about it right away. The CEO said the magnitude of that July 19th incident will never be lost on him, and he's committed to making sure it never happens again. Before he thanked his customers, employees, and team for fixing the issues. He talked for about 30 minutes about it, and really came clean and had a pretty good plan in place, it seemed like, to move things in the right direction, and it seemed to assure the market a little bit, and we're seeing it move back up a little bit today. So CrowdStrike, moving back in the right direction. You can see still firmly imprinted on this. On the dead cent on the middle of this descending linear regression. So still not looking great, like I said. Snowflake, one of them that is starting to move back up a little bit. So after the NVIDIA, another thing that we're looking at here, as you can see, volatility has really declined since after hours here. Big move back down here, so we see it in the mid-teens at about 15.81 right now. We had seen levels up towards 18 yesterday, so volatility dropping back down after those earnings reports. So we did see that. We did have a bunch of just general financial news also today. So one of the first ones we saw there, let me pull up my was GDP, and as was sort of expected, there was a revision to the GDP, but it was a revision in a good direction, so we're glad to see that. The U.S. economy ended up growing at a 3% annual pace in the second quarter instead of the 2.8% rate that they originally estimated. The government data came out earlier this morning, so that did buoy the market a little bit too. The economy has expanded at a 1.4% annual rate in the first 3 months of the year. And, looking ahead, economists at the Atlanta Fed projected GDP will grow at about 2% in the third quarter. And it did have us, like I said, ready to open a little bit. Treasury yield did move slightly down on that. I'm not sure. Let's take a quick look and see where they are right now. I was watching myself Campbell's Soup this morning. Had their CDS, no. Make sure I get the right symbol here. GPB. So we can see Campbell Soup's up about a little over 0.5%, about 0.66 after their earnings yesterday. And as we can see here from TradingView, they beat earnings 0.63 versus 0.62, so up a little one. Revenue was down a little bit more. Take a look at the financials that they released. This is what's great about TradingView. You're able, again, to go right from one spot and just click and go and get all the information that you want. Gross profit was about $806 million versus $745 in quarter two of last year. Quarter three, so that's the one we're looking at right now. Sorry, we have about 704. So pretty good results from Campbell. They continue to move up here. Other data this morning was on the jobs data, and we did see it move back down. So initial jobs claims fell by 2,000 to 231,000 in the week ending of August 24th, the Labor Department said today. Economists that have been polled by the Wall Street Journal were estimating it to be about that, so it came in right about where they were expecting. The 4-week moving average of claims fell a total. That one fell further, about 4,750 to 231,500, and that's the lowest level since early June. So, moving the right way on that. And the number of people already collecting jobless benefits for the week rose by 13,000 to 1.868 million. So we'll see what happens here as the market gets ready to open again. As of right now, with about 9 minutes left to go, we are seeing the SPY slightly up at about 0.36%. QQQ outperforming that a little bit more at 0.41%. You can see that's right in the middle of that trading range, so we really could go either way here this morning. Definitely be an interesting open to watch. from there, other interesting things I was looking at this morning was a little talk about the Fed and the interest rates, and then mortgages and what we can sort of expect there. And I sort of had to agree with the take that they had here. Sorry, just trying to find my notes. And a couple of things that they pointed out that I did think, was important to keep an eye on is that, you really, a move right now of a point or so, while it will move the market a little bit, isn't going to give it the huge pump that some people are expecting. And part of that is because of the amount of homeowners that currently are, at rates at 3%, when mortgage rates were that low. So they don't have the impotence to really sell their houses that you might think you'd see, based on a decrease in the rates that we're expecting here over the next month or so, and over the next, 6 months, quite frankly. So it's something to really keep an eye on. First time home buyer affordability is in near historic lows. And what is it going to take for that to come back, in a meaningful way? That's the question that we have to look at is, how much will it have to move? Will the mortgage rates need to drop to 3.4% to kind of release that constraint? Is that the number that, people want? And how many, rate cuts will that be, and when will that come about? Those are the questions that we're looking to see. Here, as we are about 5 minutes from open, other news yesterday that was important to me. I don't know if you guys saw it for a little bit there. I'm not sure where it is now. Do I have that on my sheets? I do not. Berkshire Hathaway had briefly broken above the $1 trillion mark for value, making it the first non-tech company to do that. I think that was amazing. So a few things about that, or about Mr. Buffett from there. One of the ones is, he has been one of the leading investors to really look overseas and take advantage of what he saw as some advantages in Japan and China over the years. And it was talking about how, the 5 Asian trading firms that Warren Buffett backed with Berkshire Hathaway, Ituchu, Marubeni, Mitsubishi, Mitsu, and Sumitomo, have all surged, in 2024. So he really seems to, again, we laugh and everyone says, I wish I knew what he was going to do next. But when he makes a move, he makes it big. He does it quietly, but he doesn't miss very often. And basically these names are what they call the so-called Sogo Shosha, which are general trading companies, and they placed big bets in 2020, and they increased his bets over the later years. Japan's trading houses, they trade in a wide range of products and materials, and they have played a huge, a huge part of the growth that we've seen in the resurgence in Japan's economy. So you would pretty much, and if you're asking what is a trading house, it is not like a Charles Schwab. It isn't a place where traders trade, but I would look at it more like global venture capital, private equity businesses, and that's sort of what they do. They invest in other companies. And in general, he had, primarily invested in American companies as being the bulk of his portfolio, but we have seen him move, like I said, into the Asian companies, and he to the fact of an area of around 9% of his investment into these companies. He was also an early investor in BYD, which is, an EV maker in China that has really been performing. And their stock shares have risen about 6% this year. Um, you know, so he just seems to find the right ones. He knows what he's invests in. He's got a good feel for these, the difference between American markets, European markets, and playing those um, to his advantage. Another one I saw was OpenAI. They are trying to raise or doing a new valuation here. So OpenAI is going to talk to raise several $billions in a new funding round. It would put the value of the startup just behind ChatGPT at about $100 billion. The venture capital firm Thrive is leading the round. They're going to invest about $1 billion into it. Microsoft is expected to add more money into the pot, so that was interesting to see that news. The new funding round is going to be the biggest infusion of cash since Microsoft invested $10 billion in January of last year. We talked about this with the Nvidia notes. It is basically a battle, of the arms race. Who has more money? Who can get all this AI developed before other people? So, it had been last valued at about 86 billion last year, and so we're still seeing it grow again. Okay, let's start to take a look here. We're 2 minutes away to the open. And we are just holding on. I will say on programming notes for today, really nice to see we're going to have Jeremy Vreeland and Matthew Tuttle, who are with Bullish Bigs, and Matthew Tuttle is with the ETFs. They're going to do a show later on and talk about their watch lists and other great information. That live stream will be at 1:30 time. Got about a minute and a half left. And not quite at highs of the pre-market, but trading towards them. On the SPY and NASDAQ here. Another stock I was looking at here, playing into earnings, was Brown-Forman. Brown-Forman is a large beverage company. They are better known as the folks behind Jack Daniel's, Woodford Reserve, and a bunch of other brands. They did come down at earnings at about 0.41 versus 0.454, so a little bit of a miss there. And the same thing, their revenue was down from about $990 million down to about 951. So a little bit of a miss there. They are trading at about a half a point below when the markets closed yesterday. They don't trade overnight as much. As it says here, they dipped, lower sales in all geographies as consumers are still strapped. So the consumer continues to be picky about spending. They had a net income of about $195 million, or 41 cents a share, down from 48 cents a share in the year earlier, and their sales fell 8%. Their CEO said the consumer remained challenged given the cost environment. Sale growth at Diplomatico Rum, Old Forester, and Woodford Reserve was more than offset by sales declines in Jack Daniel's Tennessee Whiskey and the Finlandia divestiture. So, and that's been the case with them forever. While they have a lot of other brands, they live and die with the Jack Daniel's brand. And if that sees any loss, it hurts them across the board. So the sales fell across all geographic regions. says partly due to the timing of shipments, reduced inventory restocking. I will say that is a big deal. I used to be a executive for a liquor and wine distribution company in Washington D.C. And when you get your quarterly shipments, depending on how the week breaks down, or the week versus the year for quarters, it can be a tremendous difference. Said their sales of their whiskey products fell 6%. Their tequila portfolio was down 23%, and that with El Jimador really leading that at 26%. So that's lower volumes, U.S., Colombia, and Mexico. Part of that has been really the push to the non-additive, organic style tequilas that we're seeing. We're seeing a lot of small brands. It's sort of an anomaly in the business because you don't see that in a lot of different parts of the consumer business, where sort of these smaller brands are really starting to hurt the bigger ones. Herrador is another one that was down, it says. Okay, so we are open. Let's take a look at our heat maps. Let's see what's going on. Let me give a quick refresh here. And we see SPY trying to move up 560.40 here. Again, need to get to 562.29 is the first set of resistance I really see there that would give us a something to talk about. Let's see what our movers are here. Still seeing Bed Bath & Beyond as our big winner so far for the day. That is losing a little bit of momentum here. Now only up 12%, had been as high as 14.5. So it looks like we see some profit taking here on Best Buy. Question is, where would we look as our key support? You got to go back all the way to 2022 to get when Best Buy has been this high. It had been having trouble breaking 93 and change. Got upside to 112.90 if it can get back above 103.71. So it does have move. There we go, getting bought back up, some of that profit taking. Moving it back sort of in the right direction here. S&P, highs of the day, there you go. See if we can push that up to 562.29 here. Here we go. Just trying to push. What about QQQ? Same thing, 475.59. So that's getting up there again. What happens as it approaches 477? Do we get a runner day, or are we going to stay in the range? EV maker Polestar stock is moving up, so let's take a look at that here. So Polestar moving up nicely. And says that they reported a Q2 operating loss of $242 million, narrowing from $273 a year earlier. Revenue was down got about 669 million, so they do have another year. They have a year's lead path there. And they dumped their CEO the day before. Luxury car maker had struggled like other EV startups to become profitable. Polestar said on Wednesday it would replace their CEO with Michael Lohscheller, a former boss of Opel and EV startups. Polestar, like rivals, needs cash as it ramps up its business. And said on Thursday it secured an extra $300 million in funding via a one-year term loan facility with a bank from a bank in August. Cash and cash equivalents were $669 million versus $784 at the end of March. They suffered a blow earlier in the year when one of its co-founders, Volvo Cars, said it would stop further funding. Its majority shareholder and also co-founder, China's Geely, said it intends to continue support for the group. They've been hit harder by higher discounts and lower volumes, and the punitive import tariffs imposed by the EU, the US, and China on Chinese EVs have made it hard also. So one of the ones moving up there on news. Good to see any of the EV companies moving up because in general they haven't. Although Tesla, a nice move up today, 3.69%. So don't fade the Musk. He's coming back here, broke to the top of that hourly linear regression. So we finally look like we're breaking out of this trend line here. Key will be to stay across. And kind of get above that 214.82 level. Amazon, another one that's moving up here. Up about 1.07%. Starting to give that back though. Crowd now up 6%. So CrowdStrike catching a bid here. Health and biotech, BioCarta healthcare company just got FDA approval. You can see they moved up almost 100% earlier today, now only down 83. Nutanix, another play in the cloud computing area. They actually provide air conditioning. For cloud production. SPY cooling off a little bit. QQQ still running. A lot of that here. Tesla, Snow, Crowd, Apple. Apple up over 2%. I'm guessing tech is back today. Tech is the trend. All the tech names that got hurt yesterday down 2%, up about 4 today though, so that's a good thing to see. The recoveries are better than their decreases were. See, Tesla struggling to get across that 214 though. Back to 213.63. Affirm, the pay now or buy now, pay later company. There we go. Another one that reported a lot less loss. It says followed by a narrow fiscal Q4 loss on higher revenue. Okay. Let's see what the other movers are here this morning. Seeing Donald Trump's DL JT making a little jump here today, 3%. Not surprisingly, on the downside, we see Dollar Tree, DLTR, taking a sympathy play down after the bad results that we saw from Dollar General today. Is bouncing back a little bit now, but still down about 7%. Looks to be losing a little bit of momentum. SPY up about 0.31%. QQQ now up almost 0.7%. Did get as high as 475.98. So right now 476, the mark to keep a look at. Let's take a look at the retails that we had seen yesterday. So Nordstrom's, which had made a new high at 24.03 yesterday, drops down about 5%, but now holding pretty well. Again, they had a pretty good earnings beat there. PVH, Calvin Klein, Tommy Hilfiger continuing its slide, seen yesterday. Kohl's bouncing back up a little bit, trying to get it back above the 20 mark there. Did get up as high as 21 and change yesterday. Amazon workers are organizing to join the Teamster strikes in several U.S. states over unfair labor practices. Reuters just coming out with that, so let's take a quick look here. That would have something to move. It says comes after 100 Amazon drivers started a strike at the e-commerce giant facility in Skokie, Illinois. Strike extends to the states of Georgia, California, Kentucky, and New York. So Amazon, which is moving up nicely today, despite this news. You can see now only up about a point. See what else we see here. NetApp, big loser today, about 5.78%. Not seeing any big news, seeing that Target was raised to 119. Well, I guess that could be the reason. It's above all of the seeing some news about boar's head and the listeria outbreak that happened. I know here in Ohio that was big news. Privately held band is a deli favorite. You know, I'm one of the people who thought it was worth paying extra for normally, but you know, article here talking about how many are facing the reality after the boar's head recall due to the listeria outbreak. It was about 200,000 pounds of poultry and meat, and then another second one where they did 7 million pounds of food. Included many of the deli classics from the company, like their bologna, their ham, beef salami, and liverwurst. And it reported 57 illnesses and 9 deaths by the U.S. Center for Disease Control and Prevention. Boar's Head is a privately held company who goes back to 1905 with yearly reported sales around $1 billion. And it is, you know, seen as one of the higher tier semi-upscale brands, especially compared with like your generic deli brand cases. You know, so that will be interesting. You know, it doesn't affect restaurants much because you don't see Boar's Head in any of the Subway, Jersey Mike's, Jimmy John's. So not as big of a problem there. Boar's Head under some issues here still from that. Seeing that U.S. National Security Advisor Jake Sullivan met with the Chinese President Xi Jinping in Beijing, wrapping up 3 days of talk aiming at easing friction between the world's two powers ahead of the New York November election here. Seeing the gap just reported there. Oh, they made a big move up. Now they're giving it all back. Actually negative now. They had moved up to about 25.57 before the drop. Now see QQQ up over 1%, approaching that resistance line I talked about at 477.79. Tesla coming up on that first key resistance at 214.82. Crowd slowing down a bit here. Another question is, can it fill the gap up to about 294 that we saw on, July 22nd? So as you can see here, crowd is right at level here where it gapped down. So will crowd fill the gap up towards that 294 area is the question to see here now. Again, that area in between the white lines would be the gap we're talking about here that we're looking to see if it can fill. Again, seeing most of the retailers that were up yesterday down, fairly steady. So I'm not seeing a big bounce back by them like we just saw in CrowdStrike. Temu continues to drop down. Was as low as 88. Box Cloud Storage Still showing some strength here from yesterday. Bitcoin back up above 60K. We like to see that. But you can see we're still in our trading range here. And we're starting to see SMCI get a little bit of love here today. Okay, well, that is going to do it for our morning look at the markets. I will be back at 11:30 today for 11:30 to 12:30 for a midday lunch review. And then, as I spoke earlier, we'll have Jeremy Reland and Matthew Tuttle on their live stream later this afternoon. Thank you for joining me here at Quasar Markets. You folks have a great day.